Hey, what's up everybody? Zach is back with another episode of Journey to $1 Million, and today is the start of a brand new week. We're going to be going over what to watch for this upcoming week of March the 22nd, and we're going to be taking a look at some older ones. We're going to be adding a couple new to the watch list, so go ahead and pull up prostockadvice.com/blog and pull up the new blog. It's out. I've had it out for a few hours now, and let's just go ahead and jump right into it. Alright, so last week, it was a pretty crazy week overall. Everybody is worried about the 10-year treasury. Everybody is worried about the inflation, the transition from cyclicals into, transition into cyclicals away from the growth and innovation stocks. It's a little bit tough if you're a tech and growth investor. But nevertheless, the 10-year is up to 1.732%, and this is at the time of recording. Actually, it's at the time of writing this blog. So I'm going to be watching that really closely this week. I don't really see a reason why it's not going to continue up towards 2%, maybe even 2.25%. It's possible, and of course, it's just a matter of time, in my opinion, until the fear of inflation and the fear of the rising 10-year treasury yields does get priced in. It's just a matter of time, and then most of the tech sell-off and then the transition into cyclicals will end for the most part once the fear is priced in. Now, I think that we come to a point where eventually do we really want to be buying overpriced Wells Fargo and overpriced bank stocks? And I just think that overall, even though the cyclicals are doing really well right now, and I've said this before and I'm going to say it again, eventually these will get to a point where they are just a little bit too expensive for it to be very interesting for me to be making a play on. And of course, that's my opinion, and let me know in the comment section and what your guys' opinion is. And hey, while you're down there, smash that like button. We need 1 million likes as we're going on this journey towards $1 million, which hopefully is only going to take us another year to get there. Hopefully sooner. But hey, if Tesla hits our new price target, and not only our new price target, our old price target, but it's actually Cathie Wood's, Queen Cathie's price target. ARK Invest, as you guys might have heard, the new stuff is out, and we're going to cover that today. But first of all, let's go ahead and finish up talking about last week. The NASDAQ actually fell down a little bit, and we started off the week pretty good. We had bounced from this low on the NASDAQ, and we started coming back up, actually crossed the 50-day moving average a little bit before we pulled back for the last Wednesday, Thursday, Friday of last week. But anyways, we'll see what it does. I think it's key to pass the 50-day moving average this week. Hopefully we can do that. If not, we might be trading a little flat, as was looking back towards the previous dips like in 2016, 2018, and even just last September. After we have a serious dip, start coming back up, it's not always just going to be V-shaped. So of course, just keep that in mind. It is always time in the market, not timing the market. So, and also another good Warren Buffett quote is, the stock market is a transfer of wealth from the impatient to the patient. So of course, let's just be patient, time in the market, everything's going to be cool. And, I was saying about the overpriced financial sector, the overpriced travel leisure. I would prefer to be shorting the airlines right now than going long on the airlines, in my opinion, because I think that it might be a little disappointing when the numbers start coming out in the next quarters for the airline revenue. And that is my opinion. I don't think it's just everybody and their mom is going to be going to South Beach and partying it up this summertime. I think a lot of people will be working, and I think businesses will be taking less business trips now that everybody is a little more used to conducting those meetings on Zoom and whatnot. But that is just my opinion. Let me know what you guys think. So, I think overall some of those sectors are getting pretty overpriced right now, so I would prefer to be putting my money dollar cost averaging into the tech and growth, which a lot of these companies like Amazon, Google, these are some of the companies in the world that have made the biggest impact on my life, on our life, on most of millennials' lives, at least in the past decade or two, worldwide. So these companies aren't going where going anywhere. And if we look back, speaking just specifically about Amazon, which is one of those that we kind of always, people always talk about as like just a missed opportunity. Didn't buy Amazon, or maybe they had Amazon and they sold too early or something like that. But Amazon is frequently known to take dips of 30% or plus. As a matter of fact, I pulled the charts, and since the dot-com bubble, it dipped 30% or more 10 times. So just keep that in mind. It's actually all not that super weird what's going on right now. So I personally would prefer to be dollar cost averaging to the good tech growth and innovation plays right now. But anyways, the futures at this time, the futures are actually up a little bit. So that's always good to see. The NASDAQ was doing pretty well earlier. S&P is up a little bit right now. Actually, the financial and cyclicals are pulling back, like Dow Jones and whatnot are pulling back a little bit. But anyways, we'll see how that goes. Of course, we're probably in for another rocky week, but it is what it is. Let's just stay strong. I'm going to keep dollar cost averaging into my long-term plays that I see myself in 5 to 20 years anyway, so it doesn't really matter that we're down a little bit right now. Just getting some pretty good deals. Anyways, what are we adding to the watch list to watch this week? First one is going to be BJK, which is actually the VanEck Vectors gaming ETF. And this includes casino hotels, sports betting, could be racetrack gambling, lottery services, gaming technology, gaming equipment. I mean, pretty interesting stuff. And I think a lot of these are still a little bit underpriced because Las Vegas just opened up the other week. So, and going towards the summer, I do think that these will probably do a better than, for example, airlines or whatnot, now that this is fully open. But I mean, the top 10 holdings, the top holding is Las Vegas Sands. Then we got DraftKings. Another good one I like is the Caesars MGM, and then also Sands China, which is interesting. But, I think overall this one is going to be good because no matter, like what I said before about the airlines and the bank sector, I mean, those are overpriced. I don't think that these are, this rotation, this reopening play, I think a lot of these are underpriced. Like, for example, with DraftKings, we've been making plays on DraftKings. If you were following along on my Twitter, link in the description, we've been doing this for a while. So, I still think DraftKings is getting to triple digits, probably in a couple of months, actually. So we'll see how that goes. But this is the online gaming specifically is a new industry in America. They just legalized online gaming. So, yeah, this is pretty interesting to me. And also I have an interest in Las Vegas personally, so I do hope to see the city do well and just overall gaming do well. But that's going to be my first thing that I'm going to be watching this week. I would like to get into more of a casino online gambling, take at least a bigger position, even though I did have DraftKings previously. But nevertheless, BJK is near all-time highs. It's pulled back a little bit. I'm going to wait for it to pull back closer to the 50-day moving average. Once that does, I'll be getting in. I'm trying to get a good deal. If I can't get a good deal, I don't really care. I'm going to pass it. There's plenty of fish in the sea. I'm going to find something better. But nevertheless, I'm going to try to pick it up once it moves back to the 50-day. These type of ETFs, I like to just hold common stock, although I can see myself getting a vertical spread or a call option or something like that. But yeah, I don't really see a problem. Like, based on the holdings, I don't see a problem with this hitting plus 20, plus 30% by the end of the year. I mean, we still have 7, 8, 9 months. I think it's possible, especially this summertime, and then moving on towards the third quarter and fourth quarter when earnings start coming out from the summertime. I think that this could see pretty good increases, exponentially actually, because it was just closed down for a long time. And I don't think that it's priced in yet. I think that there's still a long way to go for Las Vegas in general. But nevertheless, I set a price target of $70. Try to get in at less than 50. Current price is around 56. Risk is a 2. I don't see that this is very much risk, and that's buying common stock, of course. Options is a different story, and the risk could be from 5 plus to down to 1 or 0. I mean, at least 2. It just depends on your expiration, your strike, of course. But those are going to be up for you guys to decide for yourself. But nevertheless, I think end of year this is good. But More realistically, we could make a play from 4 to 6 months. All right, moving on. The next one is snow. We have talked about this one before, and I set some targets before for it, although I'm adjusting the targets right now, and I never actually got into a position on this one, but I am definitely interested in it. In case you guys don't know, Snowflake Inc. is a cloud computing-based data warehousing company based in San Mateo, California. It's recently IPO'd, and actually, if we look at the chart, it's almost back to the IPO levels. Actually, it pretty much is. So, I personally like this company, and not much of my opinion has changed on it, but anything in this cloud computing sector is doing pretty well, and if it wasn't for this pullback that we've had, I think this one would have done a lot better. I don't see any problem with this getting towards even $500 by end of year. But just for specifically, I want to do a vertical spread on it. So I'm setting a price target around $260. Going to try to get in less than 220. I mean, I would prefer to get in at 215 or less, but I can see myself dollar cost averaging into a vertical spread because vertical spreads are actually not very expensive, and we can save a lot of money by doing the vertical spreads. However, I'm going to give this one a risk of a 5. This one is pretty volatile, and it still is relatively new. It hasn't IPO'd all that long ago. I mean, it was in September, October. But nevertheless, I think it's going to move from 220 to 260 with some good news coming up. And also, if the general market, like the NASDAQ, the triple Q, the tech, if the sector does start to move up, and that's why I give it a 2 to 4 weeks, I think in general, they will start to move up a little bit. So that would definitely do wonders for some smaller companies like Snowflake and whatnot. But, we'll see about that. But I still do think it's possible. I mean, 260 isn't that all that far away. So, alright. So, yeah, but keep in mind that's a risk of 5, and that's because of the shorter time frame. Yeah. But anyways, and then the ones that I've already had on my watch list that I want to mention again, the notable mentions. First one is going to be CLII, Climate Change Crisis Real Impact Acquisition Corp. What a wonderful name. But this is actually a SPAC that's gotten really beat down, and this is a charging station play, which, there's a lot like Blink, the EV. Actually, this one was the one that merged with EVgo, but there's currently a few that are really talked about right now. And, I mean, it's pretty interesting if you consider it. I mean, I know that Tesla is obviously making their own infrastructure, and so is NIO in China. But, I think that the market is just going to be so big that there will be just more of a need than just the car manufacturers to be making their own infrastructure. So I think this could be a good play. Overall, I definitely want to get into a charging play, and I was obviously in some, if you guys been following along on the Discord, link in the description, but now I'm not anyways because I cut most of my positions when this transition started into the cyclicals. This little dip that we're in the middle of right now. But I will be slowly getting back into some smaller and shorter term positions like this. So yeah, I think overall this could be an interesting play. My opinion hasn't really changed on it. Although I have adjusted my price target based on the option that I want to do. And it could be a vertical spread, could be a call. I want to save a little bit of money. I don't want to put much into it because it is a SPAC. And to be honest with you, the safest thing to do is just buy common stock. Just start dollar cost averaging. Eventually it will go up. I mean, this is a pretty solid play. But if you do want to get into an option and save money, don't want to put too much into this position, which is understandable. I mean, you can't just put as much money as you want into every position. So I would recommend a call or a vertical spread. However, it's definitely a lot safer. I'd probably lower the risk to a 4, or maybe even from a 5+ to a 5, but something like that I think could be pretty interesting. So yeah, anyways, try to get in around $11, ride it up till 16. Risk is a 5. It is a SPAC. It is an option. I mean, time frame 2 to 4 weeks. I don't see any problem with that as long as we get some good news this week. And then last but not least, probably why all of you guys are watching this video, like I was talking about before, Tesla has a new price target from ARK. I'm just reiterating my price target for Tesla, which is $1,200 end of year. But anyways, there was some news coming out towards the end of last week about the Chinese government banning the Teslas because of the cameras and the following the military and government personnel around. But yeah, anyways, the Chinese officials claim that the electric car has sensors that can record video, monitor when and where the car was used, and obtain personal information about the driver that can be sent back to the U.S. Really? I mean, in case you guys just woke up out of a coma, that's kind of what the point is about Tesla is collecting the data to use for their autonomous driving and for the different AI and whatnot. I mean, yes, that's obviously what's going on here, and I wouldn't be surprised if it's not even about being surprised. It's basically every single company that can collect data will collect your data. Of course, it's the Chinese government, so they're being extra cautious. But I think this is a non-news story. This is totally unnecessary, and it's blown way out of proportion because, yeah, I mean, for sure it's like that. But it's kind of like some bigger Fortune 500 companies or even U.S. government personnel, they aren't allowed to use Chinese software programs, possibly say Zoom or even WeChat or something like that. I mean, yeah, because the Chinese government could spy on you. So, that's just doesn't really affect anything because, like, for sure, Tesla is collecting the data. They're doing an AI play. They are trying to make the autonomous driving and whatnot. So for sure, they're collecting your data. So, whatever. It's expected the Chinese government would not want their military personnel to the U.S. government to know, or Tesla to know where their military personnel are moving around at. I mean, for sure. So I don't think this is this is not even worthy enough to make the news, in my opinion. It's pretty normal. So if anybody is freaking out about this, I think that's way blown out of the water. And around the same time, ARK Invest came out with the new price target, which was $3,000 by 2025, and actually that is the expected value, which is and they got that based on their Monte Carlo analysis, and then their bear case was $1,500, and they said we believe that there is a 25% probability that Tesla could be worth $1,500 per share or less in 2025, and then their bull case is $4,000, and they think it's 25% chance that it could be worth $4,000 or more. But anyways, point is, it's between $1,500 and $4,000, around $3,000. I'm not surprised by that at all. And if you guys were following along in some of my previous blogs or on the Twitter or whatnot, we were talking about, like, I was pretty sure that they were going to come out with a 3,000 or 35. I think I said 3,500 actually. You guys can go back in a couple of blog posts actually last week or the week before we were talking about this. But yeah, I mean, $3,000. I mean, it's right in there though, so I'm not really surprised because, I mean, 4 years is kind of a long way. So, and even I think it could go to $1,200. Now, if you guys are thinking like, whoa, that is way too much. What are you talking about? You think it's gonna 6x in 4 years? Like, yeah, actually, I kind of do. To be honest with you, I think it's going to double, almost double, I'd probably say, by end of year. I think it could hit $1,200. I don't think that would be very difficult. Yes, and before you say I'm a crazy person, let me just explain. So first of all, the Cybertruck sales the Cybertruck should start rolling out. And whenever they do, some people estimate it's going to be a $50 billion of revenue per year. Okay, so that's a lot of money, obviously. And that's basically what their entire Austin, the Texas, Giga Texas is doing. So, obviously you guys know that the U.S. truck market is huge. It's like $190 billion. So some are estimating Tesla can capture about 50 billion of that because they would pull some of the truck and they would pull some of the geek, like whoever wants the Cybertruck might not be the traditional people that had trucks in the first place. So they're estimating around 50 billion, but I think you guys understand what I'm trying to say. So that's the first thing. But then my second case is actually the Model 2 is supposed to debut at the Guangzhou Auto Show the end of this year, November, December. I mean, that is going to be huge. because the Model 2 is supposed to be $25,000 start at, and that's in the U.S. So in China, usually the cars are a little bit more expensive. But I know that the Model 3, hold on, let me do it quick, is 270,000 RMB. Let me just calculate that. So it starts at like 41 and a half. So I mean, if they can make a cheaper car, which I mean, this is pretty reasonable for cars in China, to be honest with you. It's a little bit of small car, but it's normal. Like people, they're everywhere on the streets and whatnot, and it's still got it gives you that status symbol of driving an import, even though they're made in China. But it's an American, a foreign brand, and still Tesla is still by far in the lead when it comes to electric vehicles, no matter what company you're talking about. And I think that this face, this status symbol, I think that's important. And they really have established a brand. And to be honest with you, a lot of Chinese people, they don't even know what NIO is, or Xiaopeng or Li or whatever. But they definitely know what Tesla is. So I mean, just goes to show you that Tesla is still by far in the lead. And they have this brand recognition in China. So my point is that I'm trying to make here, if the Model 2 does come out and it's around 25,000-30,000 US dollars, which I assume it would probably be around 180, 200,000 RMB, which is about like that. I just assume that based on the Model 3 is 270. But nevertheless, that's going to be a game changer because that is even cheaper, even more locals can get into them in China. And I just really think that, and by the way, in case you guys don't know, China is the biggest market for EVs in the world by far. So I think that would just be insane for the sales. I mean, I think it's just going to get blown up, not to mention they're made in China, so the logistics can make it very cheap, very quick. And man, I just think that's going to be so big. I really do. Based on, I've lived here, I've seen how fast the cars have gotten out on the streets. I mean, the Model Y just started selling not too long ago, and I see a bunch of them already. Like every day, I'm like, oh, that's the Model Y. I just see few a day, just all of a sudden, and they've just been getting out on the streets. So, but yeah, I mean, it's just there everywhere you go. So I think an even cheaper one, even easier to get into, price-wise, I think that this is going to do amazing. So, anyways, that's just my opinion. And that's the second reason. So I think just with that, I think Tesla will pass $1,000. And that's not even accounting for the Cybertruck sales. But yeah, I think just with the Model 2 coming out soon-ish, I think it should hit $1,000 on that. But nevertheless, and then the last reason is the FSD, the full self-driving, and the AI. I mean, like we were talking about before, Tesla has collected the most data for the roads, and whoever is going to win the autonomous driving, whichever company wants to win, it's going to be who has collected the most data. And Tesla is by far in the lead because they've been doing this for 10 years now, at least in North America. So they by far have the most data, and I think that this is a data play. I mean, I look at Tesla not as a car manufacturer. I look at them as a software company or a tech company. Because I think that the full self-driving, I think that is much more powerful than, coming out with a Cybertruck. I think that the FSD is going to be game changer because they can consistently lower the cost of their car. Yeah, sure, they can make them cheaper, but they also can lower the price, the MSRPs, because they can charge for that full self-driving. They can keep charging for it, so it'll make up the money. And you don't have to get the FSD, but eventually it'll probably get to a point where your insurance company will maybe even require you to have full self-driving because, like Cathie Wood said the other day, was that the insurance companies will start considering human drivers as weapons of mass destruction because they account for 30 to 40,000 deaths per year, which is a really interesting tidbit, to be honest with you. So, and I do agree with that. I've always thought that it is an eventuality that we will get to that point. And I don't think that it's as far as people realize. As of living in China, and I've seen the EV revolution, how fast it can take off, and with the infrastructure and whatnot, it just popped up overnight, it seems like now. But I think a lot of people in the States, maybe in more rural areas and with less infrastructure and less Teslas. They don't see as many Teslas. I think they don't realize how big this is going to be and how quick it's gonna blow up. But you guys are probably tired of me talking about Tesla because I think I might always talk about that. But let me know if you guys are bored about that. But hey, it is what it is. My price target is the same, $1,200. Entry, try to get around less than $650 if you can. I put a risk of 3. Might get some hate for that, but whatever. And yeah, end of year. So take it what you will, do your own research, make your own analysis. I mean, hey, this is just what I'm doing. You don't got to copy me. Please don't, actually. I would prefer if you didn't. But take it with a grain of salt as always. But anyways, keep in mind, the risk is on a scale of 1 to 5. 1 is the less risky, 5 is the most risky. I feel more comfortable putting more money into the 1s and less money into the 5s. That's just how I do it. Follow me on Twitter. Follow me. Subscribe on YouTube. I mean, smash that like button. I need some more like buttons to be smashed here, guys. I do have an Instagram link in the description, and in case you guys are wondering what broker these awesome charts are coming from, where I draw the arrows and the boxes and all the lines, candlesticks, I mean, it's really good. And also I take a lot of my fundamental analysis from the news section. I can see what ticker I'm interested in, read the news about it. It's really cool. But it is Webull, and find the link in the description. They're giving away a couple free stocks right now. I think it's 2 or 3 free stocks, and one is actually Google, could be Google. So you do have a chance to win a couple $1,000. So you might as well go ahead and use the link to sign up and get your free stocks. It does support my channel. And as always, I really do appreciate you guys. And hey, I will see you guys on the other side. Peace.